So welcome back to my channel, and in this video, we're going to talk about the 3 reasons why I don't like to use a stock screener. So if you have been following my channel, then you'll realize that I have made a 6 video series on how to use a stock screener, and this is the very last one. So if you didn't watch the previous one, make sure you go back and watch them, because I cover how to use it, when should you use it, why should you use it, so on and so forth. And for the final video, I just want to say and educate you on the 3 reasons why I don't like to use a stock screener. And if you meet these criteria, then you shouldn't use a stock screener too, because it means you are in a good place already and you don't need one. Okay, so let's dive in. So before we start, I just want to celebrate another successful case study within Investing Accelerator where Serena made 32% from Boeing within 1 month. So that is fantastic, Serena. I'm very happy for you. Congratulations, and looking forward to your next successful investment. So for this YouTube channel, we are doing a giveaway, and if we reach 100 likes for this video, then I'll be giving out the 3rd book of harmonic trading. So if you have been following my 6 video series on stock screener, you'll realize that I have given out every single book of harmonic trading. So this is another chance for you to get this book, and it really contains a lot of different price patterns for you to analyze the market. And I feel like if you just read one out of the 3 books, that will put you miles ahead in terms of other investors. And this was actually very beneficial to me many years ago when I was studying and testing different strategies. So if you're still struggling with technical analysis, then make sure you click the like button, leave a comment below, and once we reach 100 likes, then I'll select a winner. So I really look forward to that and sending out this free book to you. Okay? So now, after going through 5 videos on how to use stock screener, you'll probably notice, or you have picked up a couple of hints on why I don't personally use a stock screener. Because when you are using a stock screener, the goal is to really find new stock ideas that I have previously have not considered. And that is probably going to be outside of my domain. And that is the key. It's outside of my domain. When I'm investing, I like to focus on stocks that I like, I trust, and that I'm a customer of. And when I'm using a stock screener, I usually come across stocks that I don't like, I don't know, and I'm not a customer of. And what does that mean? It means that I need to spend extra time doing research over the business strategy of the company. I need to do research over the management of the company. I need to actually go try their product if I can. If I cannot, that'll be a bit troublesome. I need to go experience their store if possible to see if I like them. I need to see if there are customers buying their store, like why they're buying, why this company is even successful to start with, so then I can feel comfortable and confident to invest in these companies. So that's really the first reason, is that I come across stocks that I don't know, don't like, and I'm not familiar with. Now, the second reason is that I come across stocks that are not within my industry of expertise. And this actually happens quite often. Now, you'll notice for the last 5 videos, I actually didn't use an industry criterion. And I suggest you to do that, because if you are an engineer, then probably you want to filter for tech, you want to filter for mining, you want to filter for something that is engineering related. If you're a doctor, then you probably want to filter for pharmaceutical companies, medical companies, healthcare companies that you will be more familiar with. Because within Investing Accelerator, I actually have doctors and engineers where they focus on their expertise, and they actually make more money than they otherwise would have focusing on companies that are purely driven by hype or momentum. When I use a stock screener and I come across a stock that is not within my domain of industry, then I suddenly need to do research over the industry as well. Like, what is driving the industry? Is it the copper price? Is it the gold price? Is it the silver price? Is it some sort of user adoption on mobile? Is it the number of mobile phones within the US markets or the India markets or whatnot? So if you come across a stock that you're not familiar with the industry, then it suddenly becomes quite difficult, because you need to know the industry and you need to know what the competitors are as well. So that's really one of the key reasons why I don't like to use a stock screener. Finally, the 3rd reason why I don't use a stock screener is because I'm not in touch with those companies. And when I'm not in touch with those companies, then it usually feels like I'm 1 step behind. Because you got to remember, the market is a fairly competitive place. And what does that really mean? It means that there are people with a master's degree, people with a bachelor's degree, focusing 100% of their time on a specific industry, focusing 100% of their time on a selected number of stocks. So when you're looking at investment banking or whatnot, you usually come across people that focus on the pharmaceutical industry. And all they do is to write investment research report after report after report on the pharmaceutical industry. So they know all the players, they read all the financial statements of the pharmaceutical companies, they know exactly which drug is going to be released and when, and whether they're successful or not, and they get insider access to management to have Q&A call as well. So when you think about that, it can easily put you at a disadvantage if you are investing in a stock that you're not familiar with, you're not a customer of, and you need to manually get updated on what's happening with the stock. That is going to put you a step behind of these smart investors, if not many steps behind of these smart investors. So that will put you at a disadvantage. So when you are thinking about the stock market, you can think of it like a chessboard. There are areas where you can make an advancement that is safe. There are areas where it's a sure win. You can actually grab the opponent's pieces and make a profit. And there are also areas where it's called the kill zone. So that's when you are at a great disadvantage. Your information flow is slower than others. You don't know the company that well. You're investing based on analyst recommendations, so you have no idea what you're doing. So then that puts your portfolio and your retirement saving at a lot of risk. So instead, you should focus on what you're good at. Look at your own expertise. Are you a doctor? Are you an engineer? Are you a nurse? Are you a project manager in a construction company? Look at that and find those companies where you will have more information than the average Joe. And that is very important. And that's actually one of the key principles I teach in Investing Accelerator, is to focus on companies that you know, you like, and you trust. And once you have that, then it's very easy to pair up with good technical analysis, great fundamental analysis. And then once you find a great opportunity to invest in, then you can use stock options to invest in the market. And that's really how Investing Accelerator works. And that's why we have so many successful case studies. We have right now over 100 or more successful exits within Investing Accelerator. And I have 11 students that made over 100% from a single investment within the program. So that really is the crux of Investing Accelerator, where it puts you at an advantage compared to a lot of other investors in the market when it comes to investing. And again, we focus on passive investing. So it's really about spending an hour a week or so on investing. So if you are interested in learning more, like always, I have put all the free resource in the description below. So the first link is the free case study where you can learn how I get 30% per year from the market. The second link is the free chart course where you can get the exact templates I use for technical analysis. And I also have the giveaway for this video, and it's Harmonic Trading Volume 3. So make sure you like this video to join the contest and leave a comment below as well. So then once we hit 100 likes, then we'll select a winner from there. I'm very excited for you. So that's it for this training series. I need to think about what else to make for this YouTube channel next. So if you have any ideas, then please let me know in the comment section below. I'll see you in the next video.